Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about how audit makes you a better investor, part 2. And let's start with this simple framework that there's two types of companies. There are those companies run by Hall of Fame management teams that execute well and everybody wants to own that stock forever. And then there are those management teams that just seem out to make a quick buck and may not execute as efficiently. And you probably don't want to own those stocks. Now the problem is that if you're a buy-side investor or a sell-side research analyst, sometimes you have to own and cover both types of stocks. So how does audit help you as a public equity investor? And it's about this evidence triangulation framework. And there's three components to evidence triangulation. It starts with entity business states, or EBS, which is the outside or external forces around a firm. The second are management information intermediaries, which is the idea of internal controls at a company. And then you have management business representations, MBR, which are your financial statements and how the company presents numbers to the external community. Now, how do you apply this evidence triangulation framework to public equities? Well, it's very simple. Your entity business states is the scuttlebutt, the reputation of management, reputation of the company, and where equity research really hits the pavement and learning more about suppliers and customers and the way capital markets interacts with that company. For MII, it's about the auditor opinions that you see in the 10K filings and the SEC filings. Are they clean or are they qualified? And then when you get to MBR, this is about the financial statements. Are there suspect add-backs in the non-GAAP reconciliations? So let's look at some real-life examples and start with Equinix. Equinix has a very sterling reputation in the data center community, clean audit in the 10K, and really clean non-GAAP reconciliations. Now, on the opposite end of the spectrum is Dayforce, where they were recently hit with a salacious short attack from Blue Orca, and there's a clear internal control issue to start with. And then you look at something like Cano Health, where they had suspect add-backs to their non-GAAP reconciliations. In the case of Dayforce and Cano, there's a smoking gun that lets an investor realize, okay, I need to pause and do some extra research. You're not seeing that smoking gun with Equinix. So what are the key learnings? If you understand audit and evidence triangulation and other types of frameworks in audit, it makes you a better investor and it makes you a better public company executive. Always here to help. Thanks for watching.